Thanks for joining us on Africa 24 English. In this edition of Décryptage with Mrs. Gwen Mwaba, Managing Director, Trade, Finance and Correspondent Banking at the Afreximbank, we will discuss the opportunities of the Afreximbank Trade, Finance, Seminar and Factoring Workshop. Mrs. Mwaba, welcome to Africa 24 English. What is the objective of the annual Afreximbank Trade, Finance, Seminar and Factoring Workshop, and what are the benefits for the attendees?
A great question. I mean, this event is really important to Afreximbank because, as you know, we're a trade bank, and it's really important to us that we ensure that all of our partners, clients, and any other collaborators that we work in are skilled in trade financing. So the purpose of this trade finance seminar, it's basically one of our capacity building initiatives where we bring world-class trainers to train African bankers, African lawyers who are involved in trade, and corporates who are involved in trade financing, because we find that such high quality level of training specific to trade is not so prevalent on the African continent. And the reason that we circulate it around the African continent is to ensure that the training is accessible and cost effective for those who are attending.
What can participants expect from this year's seminar?
So this year, as you know, the world has gone digital and is still accelerating that digitalization initiative. So this year, actually, the theme of the seminar is trade financing in a digital world. So that's going to be one of the anchors of the seminar, to really bring participants up to speed around how digitalization is impacting them as they are doing their own trade. But beyond that, we will also speak to participants around how the global environment affects trade in Africa, because sometimes we think that just because we're sitting in Africa, we're immune to what's going on in the rest of the world. So that'll kind of set the scene for the event. And then in the afternoon of day one and into the remaining days, we then go into the actual technical training, where the skills in structuring, risk mitigation are shared and imparted with the participants. And that training this year will focus on commodities, because Africa is a very resource-rich continent. Now we want our bankers in Africa to be able to understand how to structure deals around those commodities that we extract on the African continent. We will also have specialist training on letters of credit, because not all of the countries in Africa are astute at utilizing letters of credit as an instrument for facilitating and mitigating risk when it comes to trade financing.
What role can digitalization play in facilitating trade in Africa?
I think there's a couple of benefits for digitalization. At the corporate level, you will find that with the onset of things like artificial intelligence, digitalization is introducing new efficiencies in how we actually process trade transactions. In some instances where, for example, document checking for those who are operating on trade services, operations desks, being done by a human being, it might take a human being maybe 2 to 3 hours to ensure that they check the documents that they've received to support a trade. If you use artificial intelligence, the same document checking can probably be completed in 30 minutes. So what you're able to do is to handle more volumes without increasing the risk to the organization. If you flip it onto the benefits for those who are benefiting from trade financing, digitalization helps by bringing solutions that can access markets, mainly SMEs, who ordinarily wouldn't be able to access trade financing. And this is why you've seen an explosion of fintechs coming into this segment. So banks are also using digital solutions to try and mitigate some of the risks for what are usually viewed or perceived to be higher risk market segments.
What is structured trade finance?
Absolutely. So structured trade finance basically is a form of financing where the transaction itself is self-securing and self-liquidating. And what that essentially means is that a lender can finance, let's say, a commodity. The commodity itself that is financed, let's say it's a stock of coffee that is going into a processing plant before exporting. that commodity is the security for the lender. So the lender is not looking outside to the balance sheet or to mortgage the factory. They just look at that commodity as the commodity that will secure the transaction, so that if something goes wrong, the bank will take that commodity, sell it, and be able to repay its loan. And if we extend it further on the self-liquidating side, what that means is when that commodity is semi-processed and sold, the money from the proceeds of that sale is what will come back to repay the facility, and then the promoters will get their margin as the excess liquidity that is left over. The beauty of these types of structures is it takes reliance away from the balance sheet. So as long as somebody has got a firm contract to produce or supply goods, and they have a firm buyer of the goods, you can use structured trade and commodity finance to mitigate.
What is supply chain finance then?
The beauty of supply chain finance, and within supply chain finance you have different facets, but one key and most important area for me in supply chain finance is what we call payables finance or reverse factoring. And I say it's important because this is an alternative means that is used to finance mainly SMEs, but not taking the risk of the SMEs directly. So if I give an illustration of how reverse factoring works very quickly, you would have a large anchor buyer. It's usually a very large local corporate or a multinational who has a string of SME suppliers. These SME suppliers are supplying all manner of things. The company that is supplying paper, the company that is supplying food in the staff canteen, the company that is supplying ink cartridges, and the list goes on and on and on. These SMEs normally are so happy to have these contracts with these large anchor buyers, we call them, because it gives them certainty, right? However, the anchor buyer, because they have leverage, will say, I will pay you after 3 months or 6 months. So what that does is it stifles the SME's ability to produce more or supply more because they run out of working capital. So they now have to wait for 4 months. They can't do any supplies because they've run out of money. They have to wait to get paid, and then they make another supply. So it might, in a year, the same SME might only be able to supply 4 times. However, with this payables or supply chain finance solution, because the bank steps in and pays the SME, they can supply 12 times in a year or 20 times in a year. So it accelerates their churn, and that means they can grow faster and one day grow from an SME to a medium-sized enterprise into a large enterprise. And when they graduate, they can then access the financing directly from the bank. But one key benefit also for the SMEs is because the lender is looking at the risk of the multinational who is owing the money to the SME, we can pass on the benefits of the pricing, because you can imagine a large company will borrow at lower rates than an SME. SME's interest rates will be very high, but because we're not looking at the credit risk of the SME, we're just looking at the performance risk, we can pass on the lower pricing from the anchor buyer to the SME. And then for the big multinational, it gives them certainty of supply. So the whole value chain benefits, but you can't run this off the back of an Excel sheet. Normally this is driven by a technology platform, and that's why it fits into the theme of this year's seminar as well.
How big is the trade finance gap in Africa?
So every year the African Development Bank does a survey actually to answer this question. And consistently, the trade finance gap in Africa is floating between 90 and 110 billion per year. And basically that gap represents the trade that is available on the continent that has gone unfinanced. It's a huge gap. And that means it's a huge problem because the opportunities are there, but there are no lenders to fill that gap.
What was Afreximbank's trade finance impact in 2023?
So we are a trade bank, so everything we do really is to try and close this trade financing gap. And as you know, we're now a $40 billion balance sheet bank, so our interventions are actually contributing to closing that gap. But the gap is so big that no single institution can close that gap on its own. And this is why Afreximbank's philosophy is to also collaborate with a lot of other DFIs and commercial banks in order to achieve that objective, to narrow that gap as much as possible. And that's one of the reasons why Afreximbank launched its own supply chain financing program. And our model is that in every market where we introduce this program, we will partner with local banks to deliver the solution.
What is the expected outcome of this year's event?
So the expected outcome, number one, is we want all the attendees to walk away with new skills. Because the topics are so broad, I only touched on two main ones, but they'll come away not just with structuring skills or understanding the risks that are involved in financing trade. They'll also come away with skills in terms of understanding how to interpret legal documentation that is governing the facilities that they are putting in place. They'll come away with the knowledge of understanding that Africa is not immune to what is going on in the rest of the world, so we have to stay attuned so that we can react quickly. They'll come away with skills of understanding risks related to documentary trade, which is different to trade, for example, on structured trade and commodity, where you're dealing with commodities. There's also other types of risks which are specific to documents when you are dealing with documents in trade. And all of this, we hope that those who will participate in the seminar will be able to go and share that knowledge with other people in their own organizations, so that as African bankers, we can collectively lift our own skills and understanding of how to finance trade on the African continent.
Mrs. Mwaba, thank you very much for answering Africa 24's English questions. Ladies and gents, please stay tuned to our programs.